This trading strategy works every day between 9:30 and 11 a.m. and it's simple and proven. My name is Colin, and for the last 6 years I've been dialing in something that I call the Trinity model, which is the exact model I'm going to teach you in this video. It's gotten me funded $650,000 in prop firms and multiple payouts. This is how it works.
Okay, so hopping right into the actual model, we're going to start with the very first thing I do every morning, which is looking at the OHLC stat map. Now, the stat map is very unique in the sense that it automates my daily bias. These manipulation levels are automatically drawn out at midnight open, as you can see right here. So I want to wait for one to be respected, like it is right here, where we trade down just below our manipulation level and trade back through it. This is going to give me that bullish bias for the day. And if you'll notice, on our 15-minute chart, we also formed two 15-minute inversion gaps just under our bullish manipulation level. The reason that I'm including these wicks in the gaps is because there's a volume imbalance right here. And anytime we have a volume imbalance with a fair value gap, we always want to include that in the drawing. So we have a fair value gap down here. We have the volume imbalance up here, so we're going to include that. And then this one up here as well. And even if you're not using the OHLC stat map, even just looking at the daily chart, you can see that we are sitting inside of a daily bullish fair value gap. I'll draw that out right here. Again, we're always going to include that volume imbalance. And we also swept previous day's low as we opened. So I'm going to use that as my bullish daily bias. So you have multiple ways of going about your bias. So hopping into step one of the actual model, the first thing we're looking for is a high time frame fair value gap. I mentioned earlier that we formed two 15-minute inversion gaps just below our bullish manipulation level. So that's what I'm going to use in terms of my high time frame gap. And if you see, I hop down to the 1 minute chart, and this is where we're at just before market open at around 9:20. So we're currently respecting this lower 15-minute inversion gap. As you can see, we're just kind of wicking into it. Now, if we did something like this, where we ended up closing below this 15-minute inversion, then I would not be taking this trade because it would no longer be valid. We'd need to find another high time frame gap. So as we dig down into this gap, I want to start to see a reaction away from it, like we are right now, which allows me to move on to step two of the model. Now, step two of the model is actually really easy. All we're looking for is SMT as we dig down into this high time frame gap. So if you'll notice, I just drew a little line right here between these two lows on the 1 minute. We have a higher low and a lower low on NQ, but if I switch over to ES, you'll notice we have a lower low and a higher low in the exact same spot. This is SMT. It stands for Smart Money Techniques, and it's essentially just showing that smart money is actively engaged at this area, more specifically this 15-minute inversion gap. Now that we have all that kind of down packed, we have step one, which is the gap, step two, which is this SMT, and obviously we have our bullish daily bias. So step three is really simple. All I'm looking for is an inversion gap. And if you'll notice, we actually formed a bearish 1 minute fair value gap right here. So if I wait for this to get inversed, that will be my official entry. I only like to enter during macros. In this case, we're in the 920 to 940 macro. But I don't want to enter before our 930 open. That could cause us to get wicked out before the actual move. So instead, I'm going to wait for this to get inversed, which it does right here. So this is now an inverse gap. And so normally, this right here would be my entry with my stop below this low. But since 930 is still about 8 minutes away, we're going to wait. So we wait till 930, which is right here. So this is 929 right here. And as you can see, we're continuing that bullish order flow past this inversion gap. So it's still telling me that this whole trade is going to be valid. So what I'm going to do now is simply set a stop order right above this high, because if we continue to break higher highs as soon as market opens, you're much more likely to continue in that direction than anything else. That will avoid us getting wicked out in a Judas. So as you can see, stop order sits above this high. We get tagged in immediately on market open. So this is our tag entry, and our stop goes below this SMT because that's our invalidation point. Now we can get into draw on liquidity. We have our entry. We have all three steps required to enter. We have our entry and we have our stop loss. Now, this is another thing. Let's actually talk about risk management real quick. The biggest thing here, this is a 98 tick stop. The way I'm going to go about discerning how much money is going to be risked in this trade, it's very simple. I always use a set amount. For me, that amount is 10% of my drawdown. Or let's say I have $2,500 drawdown, times that by 0.10, and that will give you $250 worth of risk. How do I calculate $250 worth of risk in this trade when we talk about ticks? It's super simple. All you're going to do is take your tick amount. So we'll do X as in ticks and divide that by 2, because each tick is 50 cents or half of a dollar, right? So X divided by 2, and that will give you your dollar per tick. So if we pull up our calculator, let me pull this up over here. We'll do, how many ticks was this? 98. So we'll do 98 divided by 2. Okay, that gives us 49. So that means that $49 per micro is going to be risk on this trade, given that this is your entry and this is your stop. So now all you need to do is just add that up to 250. Do 250 divided by 49, because we did 98 divided by 2, that gives us 49. So 250 divided by 49. This gives us 5 micros that we can enter this trade with to risk $250. 5 micros right here, okay? We're in this trade with 5 micros per account. Now we can do our draw on liquidity. There's a couple of ways I do this. The biggest way is going to just be looking at your high time frame liquidity levels. So you can look at your 4-hour candle open here, 4-hour candle high here, or your daily candle high here. If you want to get these 2 power of 3 candles on your chart, all you have to do is go into your indicators tab and search up HTF, and it will be the high time frame power of 3 indicator by 2 degrees. Okay, so we are in the trade. We have our stop set below this SMT. That's our invalidation point. So what I'm going to do is I'm going to trim the majority at 2R, which is right here. So we'll just use this 4-hour high. So my majority trim is going to come off here, and the last of my contracts are going to be trailed to this high right here, that external liquidity, right? So if we look at this chart, you can see that's where all of our external liquidity is, right? We have internal liquidity at this 4-hour high and external at our daily high. So if we give this a stab here, we'll just kind of play this through. This is about the point where I would be going break even, because we took liquidity twice now. We took it from here. We took it from here as well. So you could go break even here. We hit that first EP. That's half of my contracts. And then the rest get trailed to that final take profit. Okay, so we're continuing to make new highs, continuing to trade higher. My stop is just going to be trailed under these levels right here. And then we do end up finally hitting that take profit. Now, if you wanted to, if you're using the stat map, you could target the opposing bearish manipulation level, which makes most sense because we're respecting our bullish manipulation level, so we should come to our bearish manipulation level. So if you wanted to, you could have left a runner up to that high as well if you have access to the indicator. As you can see, that got tagged right here. And that is a 7R trade. Now, granted, it would be a little bit of different risk to reward based on wherever you decided to take your partials and how many partials you decided to take. However, this was the trade that I took. It netted me about 6.6K total profits, which was spread around 11 smaller accounts. Just a quick recap. We came down to our bullish manipulation level first, respected that in the form of 15-minute inversion gaps within this level. These are those 2 15-minute inversion gaps I was talking about. We then went down to our smaller time frame, waited for an inverse to form as well as SMT, which happened right here between NQ and ES. There's our SMT between those 2 1-minute lows. And then our inverse gets formed at this SIBI, which we inverse during the macro, which is super important. I never want to take an inverse if it doesn't happen during a macro. We then wait till market open to take the actual trade right here with our stop below this low, targeting our external liquidity. And if we play that out one more time, it's a very, very good soup. And that is the gist of the model. High time frame gap, SMT, inversion gap inside of a macro with a solid bias. This model, as you can see, is very, very, very simple, and I really like to keep it that way because if there's too many variables in your trading, it leaves too many things open for error. So with a model that's simple, mechanical, and consistent, it's much easier to approach the market. I'm actually taking on mentorship students to learn this model and fix your psychology one-on-one. It's a lifetime mentorship. We've already turned away like 50 people because we only want people who are actually locked in and willing to do the work. But if you're interested in that and want to book an interview, because it is an application process, all you have to do is click that link in the description. My Fun of Futures is also doing a huge 50% off all accounts this month that's until July 31st, 2025. So if you haven't claimed that, use the link below and use code Colin at checkout. But if you guys found this video helpful, please leave a like and subscribe. Leave a message in the comments as to what I should do a video about next. Thanks guys, and I'll see you in the next one.